You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will discuss Nigeria and the pathway to stability and growth. Joining me virtually for this conversation is Dr. Ayo Teriba, CEO of Economic Associates. It's nice to have you on the program, Doctor.
Thank you very much. Hello, viewers.
Thank you. Let's first talk about the Economic Associates Conference. A one-day conference, but of course it's scheduled for next week. Tuesday, September 24th is going to hold in Abuja, and Thursday, 26th September in Lagos. It's always an interesting conference. I've participated and learned a lot, but I'd like you to share the relevance of this to contemporary economic realities.
Yeah, a lot is going on around us in Nigeria. The exchange rates constantly in the news, pump prices of petroleum products, and minimum wage, hunger. You can go on and on. Face off of labor with the government, protesters with government, and the rest of it. That it is extremely easy to get lost in the detail, to lose one sense of direction. So we schedule these conferences periodically. It's the first time this year. The last time we held it was third quarter in 2023. And the idea is to wake everybody up, to global realities, from where most of the things that the country is struggling to deal with originate. Most of the things that companies struggle to deal with also originate from the global setting. So to take a quick update on global economic developments, unfolding global realities, and what they mean for us, what they mean for us as a country, what they mean for us as managers of companies, and what they mean for us as individuals, so that we will be better placed to assess the outlook. Present doesn't always define the outlook. The opportunities we have to make things better, so that we can concentrate, on engaging the government on what the government can do to make things better than bewail or cry over spill milk. And for companies, to identify ways in which they could cope, with risks originating from the global scene that affects them directly, and risks originating from the global scene that affects the country and through the country that affects them, and make better managerial decisions, protect their net worth, protect their liquidity. And in a nutshell, that's the whole intention.
Thank you, Doctor. I know it's always a great time for policymakers, for stakeholders in the economy to learn insights on how the economy is shaped and what is important going ahead. But let's look at the global outlook. Of course, a lot has happened this year, and we also are bracing up for the fourth quarter, where we'll see the US elections. We're seeing developments in the European Union looking at their competitiveness, and also in Asia, Japan, and of course the G7, the BRICS, and various other groupings. But on the global outlook, how are trends dominating cycles in reshuffling opportunities and threats at this time?
Right. Well, interestingly, in spite of a lot of negative headlines since the lockdown about the global economy, negative headlines about the geopolitical disturbances, the opportunities that the global economy presents are much larger than the threats from these global events. And it's a careful examination reveals that in the past decade, for example, from 2015 to date, in spite of collapse of commodity prices, in spite of the recessionary year of 2016, the recession of 2020, opportunities arising from the global scene are much larger than the threats that culminated in recession, in many countries around the world. And a few countries were awake to the opportunities and seized them, while most countries missed out on the opportunities, but were weighed down by the threats. And the point about cyclical swings and trend shifts is important, because many of the threats that come out of the global environment present as cyclical swings, down today, up tomorrow. They are not permanent shocks, they are temporary shocks arising from pandemic, negative shocks arising from the geopolitics. We will come and they will go. But there are some permanent shifts taking place that are more silent, most of it positive, and they are easy to miss. So the idea of the conference is to highlight how, in spite of the negative cyclical swings in commodity prices, how global equity prices have offered massive upward trend that is lifting countries that are awake to the opportunities presented by this upward trend in global equity prices, like India, that is soon going to be the third largest economy in the world, has overtaken the likes of France, Italy, and Britain, and will overtake Japan and Germany without question. Over the next 1 or 2 years, India will be the third largest. They are riding on the positive opportunities presented by global equity prices. Same with Saudi Arabia, to a much lesser extent Brazil. And Nigeria could join, the ranks of these countries because we suffer a lot from the negative consequences of the swings in oil price and other commodity prices. And we have not managed to seize any of the benefits presented by the shifts, the positive upward shifts in global equity prices. The same is true for companies. It's not just about countries, it's also about companies, that the leading companies in the world are not growing, because of favorable commodity shocks. So, they are growing because of the favorable equity price opening. You can name, the Magnificent Seven companies leading the American, corporate sector. And many of Nigeria's companies similarly could look at what opportunities there are for them in taking advantage of the favorable signal coming from the global outlook. Basically, we are saying that in the past 1 decade, if you look at it, opportunities have thinned out on the income statement, but have patterned on the balance sheet. And over the next half decade, over the next 1 decade, this process will repeat. And it's better to engage countries and companies now in conversations on how to make the best of their balance sheet, opportunities on their balance sheets, and how to manage the threats on their income statements better.
Very clear that in the global level, the equity prices, the equity activities, and of course, the balance sheet is very critical for engagement to create value, because there's a lot of transition now from that income statement. When you look at the outlook for our economy, how does the country enjoy an easy choice between the traumatic and the El Dorado scenarios? Our president recently said tough choices will be made. But at this point, when you look at our economy and one analyzes developments in our economy, how do we navigate this pathway?
Okay, yes, we have the new government led by a president that is eager to renew the hopes of Nigerians. And they've already made some choices that have increased pains in the short term. And well, you just quoted the president speaking about additional tough choices.
Yes.
But the reality, of the Nigerian situation, which is a very rare one, Nigeria may be the only country in the world that has that luxury of an easy choice between two futures. What the president refers to as tough choices reside on the scenario that we have been on. If we continue, if our present situation defines our future, it's what I call the traumatic scenario.
Traumatic.
In which we are trying to flog pretty much a dead horse. We are still talking about GDP, we are talking about oil, we are talking about agri, we are talking about manufacturing, when the world is transiting into a post-industrial phase, in which the industrial giants of the past, Japan, Germany, or the industrial, regions of the world, look at the Euro area, are in decline. Japan has been in decline for a decade, and it continues to be in decline because it has to switch out of the industrial mode. There's no industry-led growth anymore. There's no manufacturing-led growth anymore. There's no agri-led growth anymore. There's no export-led growth anymore. So opportunities on income statements or output-centric opportunities are thinned out. Most of the opportunities now reside on the balance sheet. Opportunities have become asset-centric. And Nigeria is very rare. It is one of the largest countries in the world by population that has huge idle assets that is yet to turn to those assets to optimize them. We are overflogging the GDP, but we neglect our assets. Nigeria owns companies. Saudi has turned to his companies, his football clubs, Aramco, are the most popular among them, but there are a lot more that they have taken to the market to unlock liquidity from them. And that's keeping Saudi afloat. India has done the same. What is lifting America right now are the companies, American companies that are in the stock market that are valued at $3 trillion or more. What is Nigeria doing with its government-owned companies? Number one. We have real estate. Dubai thrives on real estate. Our own real estate are idle. It doesn't matter whether it's a stadium, it doesn't matter whether it's the the old Federal Secretariat in Lagos, but the ones the government is using in Abuja or anywhere now, it's not too different from it. If you compare private office complexes with Federal Secretariat, it's an eyesore. You can still get a lot of value out of the real estate that you own. That's the one you use. We're not speaking of the one you have but are not used, that is spread all over the country. If you cannot benefit from real estate, then what can you benefit from? For crying out loud. And we have infrastructure. Nigeria is the only country, perhaps only large country in the world that owns airports but has no terminal of commercial scale. In Nigerian airports, if you want to go and receive somebody who is arriving, you can't even enter the airport. Whereas in other countries in the world, you can enter the airport 6 hours before your expected business or personal guests, before your guests arrive. You can hold meetings, you can spend money. You will be kept outside, no seat. You just wait outside or wait in the car park in Nigeria. And about 40% of the revenue in aviation are unlocked from those terminals. So you have the crowd, but you don't have the terminals. And these are classic opportunities for attracting private investment, particularly foreign direct investment. into airport terminals, into real estate, and into your corporate assets. If you de-emphasize, for instance, trying to get oil output to grow, because the value added in oil now is next to nothing. Sell more oil now. The NNPC has probably, securitized the income. No one knows for how many years ahead.
Yeah.
And we're talking now about securitizing dividends from LNG.
Yeah.
But you turn to assets and unlock unbelievable values from them today. That's the El Dorado scenario. That's what is keeping India afloat. That is what is keeping Saudi afloat. Both of them have, portals. Even Brazil also has a portal, in which they've listed a lot of those assets into which they are trying to attract global liquidity into. And they are attracting global liquidity into them and is powering their growth. They're opening up new growth sectors to replace mature sectors. So that's Nigeria enjoys that scenario. It could rejuvenate its fiscal situation. We can recharge our foreign reserves, and we can give monetary policy a new fillip. Create buffers, monetary policy buffers, external reserve buffers and fiscal buffers by turning to assets.
Very critical, Doctor. You've said it, that we need to shift from this traumatic experience to Eldorado. And those tough decisions will also hinge on what you've been involved in, which is on ground, that vehicle of the Ministry of Finance Incorporated.
It involves no tough decisions.
Okay, yes. We have a clear path through Eldorado.
Correct. Correct. I did not see how you taking your government-owned enterprises in market presents any tough decision.
Yeah.
You don't see how getting your idle or underutilized real estate to be better optimized. I don't see how it presents tough decision. And I don't see how you inviting bids from investors to come and build airport terminals presents a difficult decision. Or for you to repeat what you did in telecoms, in rail.
Yeah.
Let investors come and build new rail tracks. The president has just been to China and he was,
commending them, was commending China.
Yeah. Impressed for the infrastructure that he saw there.
Yes.
He won't feel any different if he went to India. And he won't feel any different if he went to Brazil. Or even Saudi Arabia. In Brazil, private investors are building new rail tracks.
Yeah.
And so we should think about opening the space to private investors. The investment opportunities are beyond the capacity of Nigerian government to fund them. And they are beyond the capacity of an individual or a small group of individuals. India, if you go to the Indian portals, you have people from 200 countries, investors from 200 countries registered on that portal. You talk about crowdfunding, so approaching, getting money, foreign investment is effectively, another form of crowdfunding.
Very true, Doctor.
And own a small fraction that is going to unlock, the big fraction that Nigeria can own out of.
Okay, Doctor, that's very clear. You've put that point, and it's very clear.
And with adequate liquidity, exchange rate will be stable. If exchange rate is stable, inflation will come down. If inflation comes down, interest rate will come down.
Yeah.
So devaluation is illiquidity. Is a result of illiquidity. Inflation is a result of illiquidity because what's choking inflation right now is the exchange rate. And high interest rate is a result of illiquidity. If you have abundant liquidity, all those variables will moderate, will stabilize.
Very clear, Doctor.
Growth is about liquidity.
Yes, sir.
Everybody who has a profit opportunity can get money to unlock that profit opportunity. That's growth.
Yeah.
I don't see any difficult choice there. If we break from the past in which we overload everything on GDP that has not grown in a decade, it has declined from $800 billion in 2014 to $350 billion today. And that's what you are still loading things on, please.
Very clear,
Let's wake up from that bad dream and walk into El Dorado. Yeah, thank you.
Doctor. Doctor, briefly, for companies, why do trend shifts now call for realigning of value chain participation and asset portfolios? I know the corporate sector also needs to navigate these times, but in a minute, how does this play out?
Well, companies have to wake up to the fact that historically, the only shock they had to worry about were cyclical shocks, which is like managing through seasons. You know, you move out of wet season to dry season, or from cold season to hot season. You can, you know which buttons to press. You know, in your car, you know when to put on the AC and when to put on the heater. That's how you manage the risks coming from cyclical swings. There are no permanent responses. Yeah. But with the post-industrial transition, in which digital services are replacing physical goods, a lot of intangible services are displacing tangible goods. For example, the computer disks that we used to talk about here are now being, displaced by cloud storage. So certain things that used to be produced and shipped before are now replaced by intangibles like the cloud. In energy, solar is replacing fossil fuel.
Yeah.
So the future of oil that you needed to, mine and ship is bleak. It's being replaced by solar, which is intangible. In that reality, it's no longer about cyclical swings. It's about permanent trend shifts. Commodity prices are on a permanent downward trend. And many companies will exit. Many large global players have already exited. You're talking Kodak, you're talking, which was this telephone giant, Nokia.
Yeah.
Have all been swept out because the trend, shifted against what they produce, and they were not ready for the intangibles that replaced the tangible products that they used to produce. So many companies will follow. And therefore, companies have to ask very serious questions about their value chains. We have case studies, of companies that we are going to look at the conference. And then what is challenging tangible products? Assets are intangible assets, places, digital spaces, and skills. So companies also have to look at the asset portfolios on their balance sheet. The companies with the most assets on their balance sheet, assets that can yield the intangible service flows that now drive global GDP growth and will also drive the survival of countries and companies, are able, if they are present in the stock market, to improve their market valuation and capture a lot of capital gains. That's the narrative. If you look at the top 10, we have case studies of the top 20 global companies and top 20 Nigerian companies that we review at the conference. You find that most countries now gain from capital gains in the stock market, not from net output from production. So income statements, have become more difficult to generate liquidity from, but balance sheets are looking like the easier option to generate liquidity and maintain net worth.
Well noted, Doctor. And as we wrap up, looking at the 2025 to 2029 forecast, it's interesting. This is an interesting development from your research and analysis. I just want to get your insight on how large are the looming global and national opportunities in comparison to the threats. just in summary?
Our forecasts, for the global, we generate forecasts, which are projections of a few global variables. Yeah, for example, the global income statement, for example, exports, the global exports. We look at the trend over the past decade and project the trend over the next half decade. And we find that the global export growth opportunities are very small. Then we look at the balance sheets, we look at the foreign direct investment stock, world foreign direct investment stock, which has been doubling like every 10 years since 2010, and should double in the next 5 years again. It's at 40 billion US dollars now. Should well be above 80 billion in 2029. To say that while growth opportunities or wealth creation opportunities on the income statements are slim, wealth creation opportunities on the balance sheets are huge. And the idea is to, assign specific values to them and then relate them to the country and review the scenarios. We will present the scenarios. If you continue to focus on GDP and output, the world export, the slim growth opportunity of the world export defines your limit. But if you move to the balance sheet and begin to unlock the value of your assets, the world equity stock that is doubling, every 10 years defines, the size of your portfolio. So we'll calculate that and participants will discuss it. So basically, that's it. It's not enough to speak about opportunities and threats. It's important to let people appreciate how large, quantitatively these opportunities are and how large these threats are. In this case, the threats are smaller, and the opportunities are bigger. And of course, we also present scenarios for Nigeria's foreign reserves, exchange rates, inflation, and interest rates to help the corporate participants to plan, their operations and take decisions that will help them to maximize, to get their preferred future.
A lot to learn and unpack in the conference, which is coming up next week. But thank you very much, Dr. Ayo Teriba, CEO Economic Associates, for your very rich insights as we look at the developments around Nigeria. You've made it very clear that there's a path. It's not about tough choices. Unlock value from your assets as a nation, and we'll be there on that path to stability and growth. Thank you once again, Doctor, and look.
Thank you very much.
Interesting conference holding next week in Abuja on the 24th, that's Tuesday, and 26th, Thursday in Lagos. Thank you once again for the time.
Thanks a lot.
Thank you. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further on this show. Until we come your way again, enrich yourself with knowledge of socio-economic developments around you. It is wise. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.